Boom, we are live. We are live. We are live. We are live. What's up? Let's get this thing popping. Let's get it going. Let's get it going. What's up, y'all? What's happening? What's up? What's up? What's up? Dang, TikTok made some changes to the live already. This was just last week since I've been live, and they already made some changes. Hey, what's up, y'all? What's up, everybody? What's going on? I'm Coach Vince. Welcome to the party. Welcome to Financially Lit Fridays. I'm glad y'all are here. Come on in, come on in, come on in. If you're ready to learn, if you're ready to be financially lit, double tap the screen. Double tap the screen right now. Let's get it to 1,000 likes. Let's get it to 1,000 likes. Double tap the screen. Send me some love. Send me some likes, y'all. Let's get this Friday night started, y'all. Got about an hour to go over how to invest and any other questions y'all may have. But welcome to Financially Lit Fridays. We're gonna have a good time. I'm excited. I'm feeling good. God is good. Everybody is good. How is everybody doing? As y'all come in, let me know, number one, where you are from, what city or state that you repping, and number two, if this is your first time on my live. Go. Let me see. Where is everybody from, and if this is your first time on my live. Let me know. Let me know. Let me know. Elena, what's up? Baton Rouge, Louisiana in the building. We got Alabama in the building. You on here for your first time. Montana, what's that? Montana from Baton Rouge, this is your first time. What's going on? Where's everybody else from? Charlotte, North Carolina, what's good? What's happening? First time from Houston. What's going on? Earl, what's happening? Orangeburg, South Carolina, first time. What's going on? Houston. Elena from Houston, what's up? What's up, everybody? Double tap, y'all. Let's get this thing to 1,000 likes. Double tap, double tap, double tap. Let's get it to 1,000 likes, y'all. Appreciate y'all for being here. We're gonna learn how to invest. I know y'all see it behind me. I'm gonna go through each one of those. I just dropped a video too. That's gonna be inside the Financially Lit Fridays playlist, or the financial literacy playlist. My bad. Who we got here? We got Sharika from Memphis. I hope I said that right. I hope I didn't butcher your name. My bad. Who else we got in here? What's up? What's up? What's up? What's up? I hope y'all doing good. How is everybody doing? How's everybody doing? I'm getting ready to notify my group. I'm pretty sure they already know, but I'm just going to send it out anyway. Let's get it. Let's get it. Y'all, in the meantime, double tap for me. Let's get it to 1,000 likes. And then I'll get started. Thoughts on crypto? I'll answer that. My job matches 3% and I put in 15%. Is that a good thing? No, right off the bat. I mean, it depends. It depends, Kevin. It depends. But crypto, I like crypto. Bro, I'm about to buy a semi-truck through my old teammate's trucking company. For sure, get that money, man. You got your CDL? Or you just buying the truck? Are you gonna be the one? Are you gonna be the owner? Are you gonna be the one leasing out the trucks? I think that's a smart move. You don't even gotta get your CDL if you leasing out the trucks. Where's everybody from? Let me know in the comments. Let me know where everybody is from. Drop your city or your state, and let me know if this is your first time. Drop your city or state. Let me know if this is your first time. Index funds are single stocks. Index funds all the way. I'm new to crypto. Any tips from North Carolina? Dang, questions coming in fast. What's up, y'all? Oh, that's why we just blew up. Y'all double tap. Let's get to 1,000 likes, y'all. Let's get to 1,000 likes. What's going on, Sugar Pie? What's going on? Oh, no, I don't have to drive. I'll just be collecting checks. You're going to be the owner, as you should. That's the way to go. That's the way to do it for real. Let's get this thing to 1,000 likes, y'all. That should be easy, matter of fact. We got 100 people in here. What's up, y'all? What's up? We're going to talk about how to invest tonight. We're going to talk about how to invest. If you don't follow me already, make sure you follow me. Make sure you follow me on here. Follow me on Instagram. I'm trying to get to 10,000 followers on Instagram. Follow me on TikTok. all the above. But yeah, my guy that asked me about Kevin, stay to the end. I'm gonna make sure I answer that question for you, because that's a more in-depth question. But I'll make sure I answer that question for you for sure. All right, and then once we get to the end, just remind me, and then I'll go through and answer the question. But double tap. Let's get to 1,000. Once we get to 1,000, we'll start talking about the lesson, Financially Lit Fridays, which is how to invest money. All right, so we at like 568. We have 568 likes right now. Let's get this thing to 1,000. We about to be there in a minute or so. But how do I know my IRA contributions are not just sitting in the account? I'll answer that later too. That's a good question. Y'all got some good questions. Do me a favor. Make sure y'all put y'all questions in the Q&A box. So there's a Q&A question box at the bottom down here. All right, I think it's like right here. Tap that and put your question in there, and then that's how I know I'll get back to it later. Best hedge for inflation right now, investing. That's the best hedge. Do I do one-on-one? Yes, I do one-on-ones. You have to DM me for the one-on-ones, because I only do 5 per month right now. Okay, I only do 5 per month, and I believe it's only like 2 left for the rest of this month. So hurry up and DM me before everybody else DM me. Make sure you put all your questions in the Q&A, and then I'm probably gonna answer it as we go through. But if I don't, then that way I get to it at the end. All right. So boom, we just hit 1,000 likes, y'all. Let's get ready. The way I coach, the way I teach, is very hands-on. I like for everybody that's on the live with me to participate. So if you haven't already told me where you from, and if this is your first time, go ahead and do that now so I can shout you out. Go ahead and do that now, where you from. And if this is your first time, Nikos, what's up? Let me know where you from and if this is your first time. Okay? So that we can go ahead and get the participation blood flowing. Because when I start asking questions, I want to see if y'all retain the information that I put out, because that lets me know if what I'm explaining is simple enough for you to get it. Because if you're able to repeat it back to me, then that lets me know you learned it. And then you writing it down as well, or typing into the phone, it's also going to ingrain it into your mind so that you remember it as well. So let me know where you're from. Let me know if this is your first time. Okay. So how to invest. So I think a lot of people overcomplicate this stuff. All right. Who here knows how to, well, let me say this. Who here is currently investing? Just say I. And when I say invest, I mean investing into a Roth IRA or a 401k every single month automatically. Who here is doing that? If you're not, say no. All right. If you are, say yes. If you're not, say no. If you are, say yes. If not, say no. Good. Okay, cool. So we got a lot of ayes. We have a lot of yeses. A few no's. Cool. Well, so it's a lot more yeses than no's, but this is going to be good for both parties. This is going to be good for both parties, because I'm going to go through everything as if nobody is investing. But at the same time, you're going to catch something, or you're going to learn something while you're investing that you could probably take a look at with your current setup and fix it if it's not, what you're currently doing. Okay? So here's how we invest money, and here's how we start to invest. All right? For investing, one of the first things that you have to do, okay, obviously besides learning about investing, learning about the stock market, learn about crypto, whatever you're investing in, you have to find a brokerage. So a brokerage is nothing but a big word for an investment bank. So whenever you hear brokerage, just think of investment bank. That's all that means. Okay, it's a glorified bank that lets you invest. That's all a brokerage is. Okay, so what they act really similarly to a bank, right? You go to this bank. If you want to save money, you open up a savings account. You put money into the account, and then you use the money that's inside the account to go buy things. That's what a brokerage is. Except inside the brokerage, it's specifically for securities or investments or things of value for you to hold them there so that they can increase in value. Okay? So all brokerages are not the same, which is why I have this list. All brokerages are not the same, which is why I have this list. Just like all banks are not the same. Some banks charge you more. Some banks give you charge you overdraft fees. Some banks, do a whole bunch of other stuff. You have to have a minimum to join this bank. All right. You want to be a part of a brokerage or an investment platform or company that has these 1, 2, 3, 4, 5 things. Okay. That has these 5 features. No trading fees. So what's the trading fee? When you go to buy the asset, when you go to buy the stock or the ETF or whatever you invest in, are they going to charge you a fee for simply buying it? Is there a commission that they make on their end? All right. So in the space that we currently in right now, there are a lot of brokerages that offer this, no trading fees, which is good. Because you don't want anything that's going to be eating away at your profits, eating away at your future value of your account. That's what a fee is. That's what a trading fee is going to do. Next, you want something with no to low minimums. What do I mean by that? You want something that there's no barrier to entry or very small barrier to entry. So a lot of these investments or brokerage accounts, they allow you to get started investing with as little as $5 or $1, right? To buy the next thing on this list, fractional shares. Okay, so you want something that as low as possible. Okay, because there's some brokerages where you have to invest $5,000 to get started with them, or $10,000 to open an account with them. Okay, I think anything below $500 and below is good. Okay, especially depending on these other features. So especially if they offer fractional shares. For those that don't know what fractional shares are, I'm telling you, I'm going through everything. So I'm breaking down everything step by step by step. So if you on this live, you're getting a lot of information right now. So fractional shares, for those that don't understand what that is, that's basically where you're able to buy a piece of a whole, right? A piece of the pie. Piece of the pie. Okay? Instead of buying the whole share of a stock, you can get a piece of that stock. So if a stock is $100, you can buy a piece of it for $25. Now you own basically a quarter of a share. You own a quarter of a share of that company or that stock. Does that make sense, y'all, so far? Am I making sense so far? Let me know in the comments. Yes or no? All right. We'll get to that. Hey, Bobbins, put that in the Q&A and I'll answer that at the end. But I want to make sure that those that are investing and are not currently investing, understand the process. Next thing, this is a big one, auto invest features. Okay, so a lot of platforms do not automatically invest your money. A lot of platforms do not let you auto invest your money. This is the key because auto investing takes the emotion out of investing, which is going to help you long term when it comes to investing. Ray says this is not the time to invest in the market. Way too much manipulation going on right now. Well, good thing we invest long term because we're not interested or we're not worried about the short term or right now. Okay, we're interested in the long term. And auto investing is going to help with that so that you don't even have to worry about the day-to-day that's going on in the market or anything that's going on. You can continue to invest long term without any disruptions, without any emotions. Because a lot of times what we let happen is we let our emotions get in the way and we let things like, oh, the market is inflation. The market is going down right now. Let me stop investing into the market. Nah, when the market is going down, that's the best time to dollar cost average and get as much as you can. So if it has an auto invest feature, that's going to be wonderful for you. Next, stocks, bonds, ETFs. Stocks, bonds, ETFs. You want to make sure that they offer these. This is like the basics. It needs to at least have stocks, bonds, and ETFs. Okay, for the people that's inside my coaching program in my group and inside of our community, we mostly do this, ETFs. Okay, some of my favorite ETFs are VOO, VTI, QQQ, SPY, ARKK. What else? That's pretty much it, right? Just on a base level, those are some good ETFs to get into. Okay, some good high quality stocks are, y'all know the good high quality stocks. Drop some quality stocks in the comments if you invest. Name some high quality stocks, like some well-known companies that perform really, really well. Put them in the comments and I'll let you know if it's a quality stock or not. Yes, you can invest in multiple ETFs. All right, but you want to make sure that you don't want to over diversify, because the ETF is already multiple stocks, multiple companies inside of that ETF. So for example, this is the example that I always give because it's the easiest. So the S&P 500, that's 500 of the top US companies, or the largest US companies in the US. SPY is also the S&P 500 ETF that tracks the top 500 companies in the US. If you invest into both of those, it's basically like investing to the same thing. You only need one S&P 500 ETF. It's already diversified. All right. So yeah, Amazon and Apple are strong quality, high quality stocks. So that's part one, finding a brokerage. You want to make sure they meet at least these features. They have these features involved. Stocks on DraftKings, it's okay. It's a decent stock. Number two, open an investment account. So this is your 401k, Roth IRA, traditional individual brokerage account. Okay. But most of these, you're probably going to open up an individual account. So that's separate from the 401ks, 403bs, all those different company investment accounts. This is something separate. So this is your own individual account. You set these up. You create these. All right. You open these accounts up. All right. So an individual account, this is just like a regular taxable account. So there's no really real tax benefits to this. This is just investing. This is probably what most people do. You probably just open up an account and they put it into an individual brokerage and they invest that way. What happens here is, since there's no taxable advantage to this account, it's a regular taxable account, any gains that you make in the short term and the long term are taxed. So in the short term, you have short-term capital gains tax, which is taxed at your regular income rate. And then you have long-term capital gains, which is taxed depending on how much you make. So I believe it's no more than 15% last time I checked. All right. The Roth IRA. Actually, I'm going to go to the Roth IRA last. I'm going to talk about the traditional IRA. The traditional IRA. This is a tax deferred account. What is tax deferred? All that tax deferred means is that you pay no taxes now, but you will pay taxes later. Okay? You pay no taxes now, meaning that you can write off what you contribute to your traditional IRA, but you will be taxed later on when you decide to start taking income from that account. That's the traditional IRA. The Roth IRA is the tax-free growth account. What that means is you're going to put money in here that's already taxed. The money that you make that shows up in your bank account is already taxed, meaning that your job already took taxes out and everything. It's already taxed. You're going to put it into the Roth IRA and it grows tax-free. So the Roth IRA is for people that are worried about taxes in the long run, or when they get ready to retire, because taxes continue to increase, right? If you put your money into a Roth IRA, you don't have to worry about taxes because you're taxed on the front end. Your money grows tax free. And after you turn 59 and a half, you can begin to take money out completely tax free, no taxes or anything. So that's the difference between the three accounts. Choose wisely. Now, most people, I think it would be best for the Roth IRA. All right, but it depends on your situation. Everybody is different. All right, if you want to write off taxes now, the traditional IRA would probably be the best because you'll be able to write off your contributions for that current year. So like for this year, if I wanted to open up a traditional, all my contributions could be written off on my taxes. But I would have to pay later on and risk the chance of taxes going up or my tax rate increasing and paying more on that later on. Versus with a Roth IRA, I can just go ahead and pay taxes on it today. And no, I don't care what the taxes are. If they increase taxes, if they increase capital gains tax, I won't have to pay that because I'm in a Roth IRA. Okay? Do y'all understand the difference between the three accounts? Yes or no? Do y'all understand the difference between the three accounts before I get to step 3 and 4? What about investing in HSA, better or worse than IRAs? HSA is great. I think it's something that like you should add to the Roth IRA. So it's not something that you should like substitute for the Roth IRA. It's something that you can add to it. So like if you fully fund your Roth IRA, the next thing would be to invest into your HSA. All right, y'all double tap if y'all learned something so far. Double tap if you learned something so far. Let's get it to 2,500 likes. Double tap if you learned something so far. Let's get it to 2,500 likes. We at 1.8K likes right now. Yeah, you want a screenshot? Go ahead. All right, that should have gave you time to screenshot. All right, boom. All right, so where we at? We at 2,000 likes. Keep double tapping. Let's get to 2.5. Let's get to 2.5. All right, step 3. Step 3. We're going to transfer money to the account. This is the most important part. This is the most important part. Why? Because unfortunately, most people, they put money in the account or they sit money in the account and it's never invested. It's just sitting there. That's the worst thing you want to happen when you're investing. Okay, so we want to transfer money to the account. We want to make sure that we set up auto transfers and we auto invest. Okay, if your platform, one of my favorite platforms or the best platform in my opinion is M1 Finance for long-term investing, because you can set it and forget it. It auto invests for you. You don't have to do any of the work. After you set it up, it's already done. And you can you really don't even have to look at it. That's what's so powerful about it. All right. Fidelity is great too, except they don't auto invest. They auto transfer, like they'll put the money into the account, but they won't invest for you. I hope that makes sense. So when you do this, you want to make sure you set up those auto transfers and auto invest. It's usually a button or it's usually a schedule or something that you have to set up. That's the most important thing that you need to have when it comes to investing. Because like I said earlier, we do not need emotions taking over. We don't need our minds taking over our investing strategy, because the reason the market is so up and down and then things like inflation makes it drop and all that type of stuff is because of people. The stock market is a psychological place. People let their emotions move their money. They let their emotions manage their money instead of managing their money logically, eliminating the emotion. All right. I said something the other day to the members of the coaching program, that the less emotions involved with money, the more you will have and the better off you will be. I'm going to repeat that. The less emotions involved with money, the more money you will have and the better off financially you will be. Okay? The less emotions involved with money, the more money you will have and the better off financially you will be. So we need to make sure that auto transfers and auto investing is set up. Okay? Make sure that it's invested, of course, and we need to set it up based on our schedule, weekly, bi-weekly, monthly, whatever the case may be. Whatever is best for us. If you are better off investing every single week, whenever you get paid, or just one time every single month, choose what's best for you, because you're not even going to see it because it's going to automatically come out anyway. But we need to set up the schedule that's best for us, and that's going to allow us to do that. Okay. So next is a 401k through employer good or a Roth IRA. Both are good. Both are good, but it depends. I'm going to discuss it later, Lewis. I'm going to discuss it a little later. All right, let me move out the way a little bit. So, buying assets. That's next. Y'all double tap if y'all learn something. Y'all double tap if y'all learn something. Before we get to this next one. Let's get it to let's get it to 4,500 likes. We have 3.4 right now. Let's get it to 4,500 likes. By the end of this live, we should have 10,000 likes. Easy. Easy. We should have 10,000 likes by the end of this. Easy, y'all. Double tap if you're learning something so far. Let me know if I should keep going. Let me know if I should keep going. By the way, we do this every Friday. It's called Financially Lit Fridays for those that's just joining. It's where I, basically just go over any financial topic to help y'all better understand it and break it down in my terms. As y'all can see, I like to do lists. If you go through my TikTok, you see a whole bunch of lists. Me just sitting in front of a list like this. This is like how I best put out information. But we do this every Friday, y'all, 8:30 p.m. So make sure you follow me if you don't follow me already. That way you already tapped in when I go live. Or what you can do is join our group. So, we have discussions pretty much every week inside the group off this platform, off of TikTok. So, if you want some more insight, you want to learn some more stuff throughout the week, even when I'm not, live or, not putting out a video, or know when I put out a video, like be one of the first ones to know when I put out a video, make sure you join us in my group. So you can do that at the link in my bio and by tapping on join the community. That's how you get involved with our group. We have over like 1,700 people right now. We're doing a savings challenge. We have a 10K and 100-day savings challenge. And we have a 26-week savings challenge as well. All right. FA, I'm about to get to that next. I'm talking about buying assets, and as you can see, I got some of them up already. So I'll talk about that next. I'll give you the best ETFs, and I'll also explain what they are and all that too. All right. So let's get it to 4,500 likes. Double tap. You can join our group by hitting the link in my bio. Join the group by hitting the link in my bio. To stay tapped in with us too. The reason why I created the community is so that, y'all know how social media is. Sometimes like it'll be shut down or, they'll delete people's pages. I know y'all probably see when people get banned off of TikTok and stuff like that. I probably won't ever get banned off of TikTok just because of the information that I provide. But, I don't want to take no chances. So if you want to always stay tapped in with me, make sure you tap the link in the bio and join our group. That way you never miss anything. You always in a loop with everything that I drop. All right. So let's get to buying assets. Okay. So here's what you should be buying. Now, I wanna like preface this. So when I talk about investing, I'm talking about long term. Now I feel you. I feel you. But when I talk about investing, I'm talking about long term. Okay. So I'm not talking about trading. I'm not talking about options. I'm not talking about that. I'm talking about investing, like long term dollar cost averaging or long term strategy. Like we trying to build wealth like Warren Buffett built wealth. We're trying to have time in the market instead of trying to time the market. So when I talk about assets, I'm talking about things that you do not have to worry about. I'm talking about investing in the things that you can just continue to invest in every single week, month, bi-weekly on autopilot without having to worry about it. Because I don't want you to worry about building wealth. I want it to be something that's going on in the background. And then when you wake up one day, it's just like, dang, I'm wealthy. I didn't even realize that the habits that I'm building, that I'm creating by me auto investing, by me putting this away and setting this up for myself, I've created something now that I can pass down to my kids and that I can live off of in retirement. That I don't even have to really touch the principal. I don't even have to touch the original amount that I put in there. I could just live off of the interest and then pass whatever is left to my kids and they can continue that process over and over again. So when I talk about investing, I talk about long-term generational wealth building. That's what I'm talking about. All right. Like once you set this up, once you set up the long-term stuff, Once you get that in place, once you set up your systems financially, become financially free, then we can talk about, I got you. Then we can talk about trading and options and things of that nature. But first, you need to have a foundation, and that's what we're talking about, long-term investing. So if you want a screenshot, go ahead and screenshot. I'm going to give you like 5 seconds. I'm going to give you like 5 seconds. All right, boom. All right. So let's talk about these assets. Okay? So number one, and I should have flipped these. First, it should have been diversified ETFs first. All right, it should have been diversified ETFs first. So what is an ETF for those that don't know? Who knows what an ETF is in the comments? Let me know. Yes or no if you know what an ETF is. Yes or no if you know what an ETF is. Also, double tap. Let's get it to 5,000 likes, y'all. Let's get halfway there. And then that way the rest will be easy. By the time we're done, we should have 10,000 likes. Double tap. Let's get to 5,000 likes real quick. Okay, so I see yes, no. Basket of stocks, yes. Cool. So it's kind of mixed. All right. So an ETF, that the E stands for exchange, the T stands for traded, the F stands for funds. All that basically means is it is a fund that trades on the stock exchange. Okay, that fund consists of multiple stocks. Like Pat said, it's a basket of stocks. So think of it like, instead of buying like one single M&M, I don't know why I thought about that. One single M&M, okay, for however much money, you can buy a whole packet of M&Ms for one price, right? Imagine having to buy a single M&M, you know what I mean, for 100 single M&Ms versus just buying a pack of M&Ms for one price. That's what a ETF is. It's just a basket of stocks. What makes the ETF so great is that this automatically diversifies you. So how many of y'all have ever heard people say you need to be diversified, right? When you invest, you don't put all your eggs in one basket. How many of y'all have ever heard that before? Let me know in the comments. They say that because you shouldn't be. You shouldn't have everything in one place. And that's what an ETF automatically gives you. It gives you that diversification. It allows you to invest in multiple things at once. So, for example, VOO, all right, my favorite ETF, my favorite long-term ETF, my favorite beginner ETF, for anybody that's getting started investing, that is the S&P 500 ETF. The S&P 500 is an index. That index tracks the top 500, the biggest 500 companies in the US. Okay, that's your Apples, Googles, Microsoft, JP Morgan, pretty much all the big companies that you can think of. Any big brand that you can think of is probably in the S&P 500. All right. And I think last week I talked about the 3 things most people don't know about the S&P 500. That's going up on my YouTube too soon. I just got to download that video. All right. So if you missed that, that's going to be up on my YouTube. You'll be able to catch that out. I mean, you'll be able to watch that. Make sure you subscribe on my YouTube. But the S&P 500 consists of 500 different stocks. Imagine you having to buy a share of each one of those stocks. Imagine you having to buy a share of Google, which is about $3,000 right now. Imagine you having to buy a share of Amazon, which is about $2,000 right now. Imagine you having to buy a share of Tesla, which is like $800 right now. Okay? That's a lot of money. That adds up. A lot of us do not have that kind of bread to be putting into 500 different companies. So instead of doing that, the ETF is going to allow you to buy those quality companies, all of those quality companies, for one single price. Okay? VOO is about it's about $400 right now. So you'll be able to get access to 500 companies for $400 if you wanted to buy a share of VOO. All right? Or even less than that. You can start with $100 or $50. Okay, because remember, you can buy fractional shares depending on the platform that you use. So we need to buy assets that are long-term, that we have a long-term thinking around, a long-term strategy around. Okay, and something like VOO is perfect for that. Okay, so the reason I like VOO so much is because it's diversified. It tracks the main index that everybody in the investing world looks at. Okay. And like I talked about last week, it's regulated. What I mean by that is when, a company is not performing up to the index standards, they're going to take that company, they're going to remove it and replace it with one that is. So this is what I talk about by having that long-term mindset and being able to invest your money without having to worry about it. Because imagine you having to worry about each stock, each of the 500 stocks or companies inside of the S&P 500 and removing a company that's performing bad and replacing it with a new one. That's a lot. They handle that for you. So you can literally invest in this thing every single month, every week, bi-weekly, whatever the case may be, without having to do anything. But just trusting the process and letting it do its thing over time. Because we want to be invested the longest in the market. We want to be known for investing for forever in the market. We want our kids to be in the market because we started in the market. We just want our years to compound and compound and compound. Okay, so me personally, so somebody asked this, but me personally, I invest in the VOO. I like QQQ. I like SPY. I like VTI. Okay, I like ARKK. Those are my favorite ETFs. Okay, check out XLF. That's a banking one, right? There's a lot of ETFs out there, but the main one that I invest in, where most of my money is in, is VOO. All right. So yes, you can just invest in VOO and be terrific and be wonderful. Okay. Because VOO or the S&P 500, it averages 10% per year on average over the last 100 years. Like think about that. The last 100 years is average over 100. I mean, it's average 10% per year over the last 100 years. Crazy. Okay. You need to be invested right now. This is why we need to learn how to invest. And invest in the assets that we can invest in long term. Because inflation is a mug right now. Inflation is eating away at everything right now. The food that we eat, right? The trips that we take, right? The gas. Inflation is eating away at everything right now. So we need, it's a must to be invested. If you don't invest, you losing money. You losing money. Okay, so high quality stocks. Okay, when it comes to high quality stocks, double tap if you're learning something, y'all. Let's get it to 6,000 likes. We have 5,000. Double tap if you're learning something. High quality stocks. When I say high quality, I mean large cap, blue chip, well known companies that you use on a daily basis type companies. That's your Microsofts, that's your Google, that's your Amazon, that's your Apples. Okay. Genevieve, thank you for tapping in. Appreciate you. Yes, very much, and taking notes. Awesome. Good. Keep taking notes. I like to hear people taking notes. That means a lot. So let's get it to 6,000. We have 5.1K right now. But that's what I mean by high quality stocks. Stocks that are well known, right? That you use on a daily basis, that are well known, and that have a ton of money, that has billions and billions of dollars, not just in revenue, but in savings. Okay. So when it comes to ETFs, and I'm gonna do a video on ETFs too about how to research ETFs and how to know, that they're going to be good long term. But when it comes to stocks, one of the major factors that you need to be looking at if you're going to invest in anything long term. Now, I'm talking about long term. It needs to be cash heavy. They need to have a bunch of cash. They need to be making a bunch of money. Like these companies. Apple makes $100 billion a quarter. Apple makes $100 billion a quarter, and they got billions of cash. They can buy any company they want. If there was a recession right now, Apple would be good. Apple would be good for like 5 years without it even being a scratch on their bottom line. Same thing with Google. Same thing with Microsoft. Same thing with Amazon. You want to invest in the companies that can swallow other companies, that can buy other companies if they wanted to. That's what I mean. So remember, we're talking about investing long term. We talk about investing long term. We're not talking about the short term stuff. Yeah, there's some short term stocks that you could probably get in and probably make some money, but long term, you don't have to worry about none of that. You don't want to worry about that. You just want to put your money in somewhere safe where it's going to grow and it's going to earn at least 8 to 10% per year. And that's what you're going to get when you invest into things like an ETF, like VOO, or quality stocks like Apple, Amazon, Google, Microsoft, Amazon. All right? Double tap if you learned something. Let's get to 6,000 likes. Let's get to 6,000 likes. We have 5.4 right now. We have 5.4. I appreciate y'all for tapping in with me. For those that just tapped in, make sure you follow me. I appreciate you for being here. We do this every week, every Friday at 8:30 p.m. Eastern. This is called Financially Lit Fridays. If you don't want to miss it, make sure you follow me. If you want to be a part of our group, we got over 1,700 members. Make sure you tap the link in the bio and join our group. We're doing a lot of things inside the group. We talk every week. We have a voice chat. We're doing a save and invest challenge. So I think you'll like it. And I think the members that's on this live will tell you to tap in too, because I drop a lot of nuggets. I drop a lot of gems in there without even going live. I don't even go live every day. So when I'm not going live, I try to do something inside the group, just dropping nuggets. If you need to take a screenshot, go ahead and take a screenshot. All right. Is it pointless to invest in VOO and VTI? Nah. So those are two different funds. So I mean, so VTI is the entire stock market. So that's the general stock market. It's got about 3,000 stocks in it, and VOO is just the S&P 500. So it wouldn't be pointless to invest, even though VTI does have some of the same. So the thing is, some ETFs are going to have some carryover. They're going to have some of the same companies in them, right? But you want to focus on the ones or the ETFs that's going to give you the best growth over the longest period of time, and that's VOO. But there's nothing wrong with VTI. VTI performs really well too. So you can invest in the both, but investing in the one is going to do well for you. Okay. So I hope you got the screenshot. Did y'all get the screenshot? Anyway, this is recorded, so y'all be able to get it recorded on my YouTube. So 5. All right. Once you have all of these, what's up, Gwen? Once you have all of these, okay. Yo, speaking of Gwen, thank you for showing up, Gwen. Real quick before I get to number 5. All right, next week. Now that I got y'all on here, this is the reason to join the live. This is the reason to join our group. So next week, how many of y'all have a mortgage? How many of y'all have a mortgage or a house that you're paying on right now? How many of y'all have a mortgage that's on the live? All right, cool. Everybody's going to be saying me, right? We're doing something special next week. We're doing something special next, I think I said Thursday, because we can't do Friday. It's going to have to be a Thursday. So we're doing something next Thursday, 8:30 p.m. 8:30 p.m. for the members of our group only. I need y'all to hear that. For the members of our group only, we're having a very special voice chat going over how to pay your mortgage off faster. 8:30 p.m. Eastern. Next Thursday, 8:30 p.m. Eastern, we are having a voice chat inside of our group. This is members only. This is only for members of the Money Mindset League. Okay? Where we are talking about how to pay off your mortgage faster. There are 5 methods that you can do to pay off your mortgage faster. And I'm talking about 4 to 8 years faster. Maybe even 10 years faster, depending on which method that you use. So that's literally going from a 30-year mortgage to a 20-year mortgage. That's literally hundreds of thousands of interest saved that you can do what with? Invest. Imagine investing hundreds of thousands of dollars into something over 10 years. The 10 years that you save from paying a mortgage. Imagine what that would do. Okay? So, why pay off your mortgage faster? Isn't it better to buy ETFs and pay off mortgage faster? We're going to talk about that. I'm glad you brought it up because you already know we was going to talk about it. So we're going to talk about that inside the group. So if you want to join our group, if you want to join our family and be a part of this special class or this special session, make sure you tap the link in my bio and join our community. All right. Hey, what's up, Lucky Libra? Make sure you join our community because it's only going to be for members only, y'all. Members only. It's not going to be open to the public. Members only. So make sure you tap in with us. It's going to be led by Gwen, okay, the real estate expert, okay, that's been in real estate for 20 plus years. Okay. So make sure y'all tap in with us, hit the link in the bio and join us because we're going to be doing some good stuff inside the group. All right. So let's talk about compound interest, y'all. Once you get all of this stuff set up. What's up, Oreo? Once we get all this stuff set up, you have your brokerage, you have an investment account that you want, you transfer money to the account, you buy quality assets and ETFs. Now we can just really sit back and let the magic happen. Y'all know the 8th wonder of the world is compound interest. How many people knew that? The 8th wonder of the world is compound interest. It's so crazy. It's so crazy that Einstein couldn't even wrap his head around it. So he called it the 8th wonder of the world. That's what compound interest is. When you understand the power of compound interest, the power of letting your interest stack on top of interest over a certain amount of time, over a certain amount of years, okay? That's what we will be doing when we invest this way, okay? That's how $200 a month can turn into $1 million in 40 years, okay? That's how $500 a month can turn into $3 million in 40 years because of compound interest, okay? That's how $100 a month can turn into $200,000 in 20 years, okay? So we got to let compound interest do its thing. And the best way for us to do that is by setting this up and having this plan in place when it comes to investing our money. That way we can just let it work. Instead of getting in the way, instead of stopping it, instead of letting emotions happen, from letting us be in the market and gaining those compound interests, okay, we can let it work for us. We can let it do what it do. We can let it take over our accounts so that we can build wealth and let it just do all the magic for us. Okay? So double tap this, y'all. I am done. I'm going to start answering some questions. We got like 10 minutes left. But double tap this if you got some value out of this live. I need y'all to go crazy on the double tap. We got to get to 10. We got to get to 10,000. We at 6.2 right now. I believe we can get to 10,000. But double tap this live if you got any kind of value out of this live. Double tap, double tap, double tap. Is it smart to do this before a recession? Yes, you need to do this even in a recession, during a recession, most importantly. At what age do you recommend diversifying into bonds? So I'm gonna tell you what I'm gonna do. I'm never ever buying bonds. Never, never ever buying bonds. Okay, I'm gonna keep my money in the S&P 500 for forever. Number one, because that's what Warren Buffett is doing. All right, when he said when he dies, he's not even like when he dies, just put 90% of his money into the S&P 500. You know how crazy that is? It's not even crazy, but 90% of his money is going to the S&P 500 when he dies. That's how confident he is in the S&P 500, and I believe in it too. Like that's just America, really. You betting on America. America's going to continue to be America. All right. Number two is I never plan on actually taking out all of my money. So like I said before, my plan is to live off the interest. So I don't necessarily need to invest in the bonds. I don't need to necessarily protect my money because I'm gonna keep it invested, and then when I'm gone, I can pass it on through my trust, right, to the next to the beneficiary, okay, to my kids or whoever that may be, okay, so that then they can continue to invest because I got it set up that way to where they can continue that and continue building without even touching it. So imagine that. Imagine setting it up that way. Now, if you are worried about that and you only keeping it for yourself, then once you get to, I would say like 10 years from retirement, that's when you need to start allocating bonds into your account. I would probably go like 40 once you get to 10 years. Then I would go to like 50 once I get to 5 years from retirement. All right. I believe in it too. Yes. Move over so I can see y'all. Hold on. Hold on. Where can I invest in the compound interest? Any investment account. Invest to the S&P 500 so that you can earn interest. All right. Anything that's going to give you interest is going to allow you to compound. Okay. That compound is earning interest on your interest. But you have to have it invested long enough for it to start compounding. All right. Dang, everybody's saying move over. All right, cool. I got you. All right, I'm going to give y'all 5 seconds. 5, 4, 3, 2, 1. Boom. All right. I hope you got it. I need quick money. Can't wait 20, 40 years. But yes, you're right. Yeah. So long-term investing is like the backup plan. If you need quick money, set this up first. Create your long-term strategy just in case. All right. This is how I think. I want y'all to start thinking more financially aware and more financially savvy. Okay. Start thinking like this is a backup plan. This is not my first plan. Of course, I want to make money now, right? I want to get rich and be wealthy now. I want to have $1 million now so that I can enjoy it. Yes, but the only way that I'm gonna really be able to enjoy it is if I already got my foundation set up. Am I making sense to anybody? Am I the only one that thinks that way? Or is that making sense to anybody else on this live? Because that's how I think. If I have it set up already, if I have my long-term strategy set up, I can go out and do whatever I want to do. I can go make that quick money because I know that whatever happens, at least I got my long-term strategy set up. At least I'm gonna have something to fall back on. At least I'm gonna have something to show for all the hard work, even though I didn't, become a millionaire before then. Okay, so that's the mindset that we have to have. Exactly. You shouldn't invest if you need it in 5 years. You only invest money that you can afford to lose, that you don't need. Dang, TikTok done. I can't even scroll up no more. It's all good. Let me see if I can do the Q&A. Dang, y'all done froze TikTok. Hold on. Can y'all see me? All right, can y'all see me? Cool. I just had to, I had to, like, I don't know why my phone just froze, but we good now. Exactly. Got to change the mindset. Thoughts on using leverage to juice your returns. I don't like leverage. Makes sense. Somebody asked me, I'm 25 and don't know where to start investing my money. Any suggestions? Yeah, follow this plan. So I laid it out for you. All right. My suggestion. All right. You're so young. You are so young. Please take advantage of your time. Please take advantage of the amount of time you have to invest. Open up an investment account with M1 Finance. That's my favorite one. If you need help, just go to the link in my bio and tap on Start Investing with M1 Finance. Open a Roth IRA. Okay, transfer money to it. You're going to need $500 to open up the Roth IRA with M1 Finance. Okay, if you got $500, just put it in there. And then once you open up the account, you can transfer it out and then start contributing whatever dollar amount. But I highly suggest that you fully fund your Roth IRA, which is $500 per month. Okay, if you can do that. If you can't do that, then just do whatever you can. $100, $200, $300, right? But you need to start. You need to start compounding immediately as possible, as fast as possible. Okay? Then make sure that it's automated, meaning that it's automatically going in every single month so that you don't have to worry about it. Okay? It's automatically being drafted from your bank account and being invested. That's what I mean. Okay? Let's see. What else y'all got? What percentage crypto do you recommend? Of like all the money that you have, at least 10%, honestly. Like that's how, like, at least 10%. And crypto is the future. Yes, you invest every single month. I invest every single month. Do I use employer 401k or open a Roth IRA? So you can do both. So when it comes to the 401k and the IRA, when it comes to the 401k and the IRA, you should always take advantage of the 401k if your company matches. So if your company matches 3%, then you need to contribute at least 3% and then max out your Roth IRA. So match what your company matches, then max your Roth IRA. It's called the match and max system. Match and max. Match and max. Match your 401k, max out your Roth. Okay, from there, you have two options. You can put extra money back into your 401k, or you can start investing into your HSA, which is about $3,000 per year that you can invest into a HSA if you have one, if you're eligible for a HSA, which is a health savings account. Okay, so for example, let's say your company matches 3% of your income yearly, or whatever you match every month. You put in 3% every single month or every paycheck. Okay? Only. Then you invest $500 per month in your Roth IRA. And if you just do that alone, you good. And if you don't touch it, you let it do its thing, you let it do that for over 30 years, you're going to be good. If you only do that, you don't like... People complicate, or most people complicate investing. It's not complicated. Okay? You like literally all you have to do is max out your Roth IRA. If you really just wanted to max out your Roth IRA, that's the minimum. So I would say a goal, like a big goal, a big financial goal, is to max out your Roth IRA. If you're able to do that, you can be good. And you have like 40 years to do that, you're gonna be good. There's nothing to worry about. And then you can do whatever the heck you want to do with the rest of your money from there, because at least you'll have you'll have money invested. You'll have something to live off of in retirement, right? So don't overcomplicate it. It can be as simple as that, y'all. Okay, so if you match what your company matches, and then you max out your IRA, you're gonna be good. Point blank, period. So that's my 2 cents on that. Good question. You've been thinking about VGT. That's the Vanguard total. No, the Vanguard total stock market is VTI. Hold on. VGT is the growth one, right? Let me make sure. That's the Vanguard. Boom. That's the Vanguard Information Technology. I don't know about this one. I'm gonna have to do some more research on that one. All right, I don't know about that one. So when I do, I'll make sure I answer. Join our group, and I'll make sure I'll give you an answer on that on VGT. Mutual funds. All right, so mutual funds are another way to invest. You can also invest in the mutual funds, but mutual funds I think are last on the list. So like, if I had to choose between an ETF or a mutual fund, I'm going with ETF. And here's why. ETFs have lower expense ratios. Mutual funds have higher expense ratios. The reason mutual funds have higher expense ratios is because they are managed by a fund manager. Whenever your money is managed anywhere, it's going to cost more because that manager has to get paid. Okay? And most mutual funds, all they do is put your money into the S&P 500, honestly, depending on which mutual fund that you get into. But most mutual funds are just going to be doing what you're going to do anyway, except they're going to personally manage it. So, if you want to save a little bit on fees, because you're going to get hit twice with the mutual funds on the expense ratio and the manager fee, you might as well just do an ETF where you only pay an expense ratio. VOO's expense ratio is like 0.03%, meaning that's like 0.0003. So that means for every $1,000, you're going to pay 30 cents. And that's it. Okay? So mutual funds are good. If you can only invest in the mutual funds, then do that, because I know some companies, if you work with a financial company, they won't let you invest in the ETFs or any individual stocks or things like that, but they would let you invest in the mutual funds. I don't know why. That's just how some financial institutions are. But if that's the only thing that you can invest in, mutual funds are good too. But just know that there's going to be a higher fee associated with mutual funds because there's an active manager that's managing your money. Good question. Hey, thank y'all for the roses and the gifts, y'all. I appreciate that. What about investing in crypto? I do like crypto. So I believe crypto is the future. Let me square up real quick. I do believe crypto is the future. I like Bitcoin. I like Ethereum and a couple other ones as well. I think if you invest into both Bitcoin and Ethereum, kind of like you do the S&P 500, I think you'll be fine. Like I said earlier, you can invest like 10% of your total assets in the crypto and you'll be good. If you believe in the digital world, if you believe that we're moving towards a more digital landscape where everything is digital, less cash, because we are, I don't know. Let's do a survey now. Who uses cash here? Still, let me ask this question. Let me ask a better question. Do you use your credit card more or do you use cash more? Cash or card? Y'all let me know in the comments. Cash or card? Which one do you use the most? Cash or card? HSA is a health savings account. So some health plans let you have a health savings account that you can invest in to basically pay for your health expenses. So yeah, I didn't see anybody say cash. I'm seeing all cards right now. So digitally, I mean, that's the space that we headed in. If you believe in that, if you believe in so let me explain it this way. Credit, get your points. Exactly. Yeah, you've been following me. So if you believe in so right now, the financial system that we're using right now is old and outdated. Why? Because it's slow and it costs a lot. One thing about us, about people, about America, about the system is if we can get it faster and cheaper, we would do that. That's all that crypto is going to allow, the whole world to do. Okay, instead of it taking 30 days for you to close on a house, with crypto and the blockchain, it's going to take a minute. It's going to take an hour. Okay, instead of it taking 3 to 5 business days for you to transfer $10,000 from your bank to another bank, it's going to take a few seconds with crypto, and it's going to be cheaper. So that's the whole, that's the basics of crypto and the world that we headed to. If you believe in that, then why not invest in the crypto? I do personally. You can choose to do that on your own. You got to do your own research, of course. Which is better, the Roth or the traditional? In my opinion, the Roth, just because it grows tax-free. You don't have to worry about taxes later. I'm having problems linking my bank account. What platform are you using? What platform are you using? Thank you for following me. If you don't follow me already, please follow me. Please follow me. And double tap if you're learning something as I go through these questions. I'm going to try to get through all these before I get off. Or as much as I can. You have 10,000. Where would you invest it in today's marketplace safely? Safely, that's relative. So it depends. My safety is the stock market, the S&P 500. So I would put it all into the S&P 500. But here's the thing, though. If you have a system set up, if you have like a financial game plan, if you have if you're intentional with your money, then you should already know exactly where your money is going. Okay, if you have like a certain amount of, if you have your money allocated, if you have a system where your money is automatically allocated without you having to make that decision of what do I do with this money, then you won't have to worry about that. Okay, that's one of the issues when it comes to money. A lot of people let their emotions get in the way, and letting their decisions, emotional choices and decisions get in the way of their money. You should have a plan set up to where you already know, okay, once I get a large sum of money, this is what's happening, point blank, period. Okay, such and such is going here, such and such is going there, such and such is going there. Okay, it's already split up. Okay, the best thing that you can do with that is really diversify it. So with the 10,000, so let's say for me, I'm gonna just tell you what I would do. Right, majority of that, probably 50% of that is going to the stock market. Okay, the other 50% is going between my business, is going between stock, crypto, is going between like real estate, saving for an investment property or something like that. I already know like where my money is going. That way I don't have to guess. That way I don't have to make a decision. It's already set up for me. So whenever I get a large amount of money, I already know what's going to happen. Most of it's going to the stock market. Some of it's going to crypto. Some is going to other ventures. Some is going to my business. And it's already allocated percentage-wise. The best savings account, there really is no best savings account. It just all depends on you and what works best for you. What I would say is any savings account that you get, it should be no fees, no overdraft fees. There should be no minimums in the account, none of that stuff. How do I start? Where do I start? I think I already answered this, but basically you want to create a game plan. Really, you want to figure out how much you can afford to invest every single month, right? Whatever that dollar amount is, you need to have it automatically sent to your investment account, okay, to whatever brokerage account or whatever platform that you're using. So, for example, I'm using M1 Finance. $500 per month goes into that account, okay, every single month, because that's how much I can afford to put into it. That's maxing out your Roth IRA. So if you do that, that'll be a good place to start. Invest into the S&P 500. and do that year after year for as long as you can, and then you'll be good. M1 Finance, if you want to invest long term and earn compound interest. M1 Finance is my favorite. M1 Finance is my favorite. Okay. I'm gonna answer like two more questions. Go ahead and take a screenshot. Who is that? Go ahead and take a screenshot. 5, 4, 3, 2, 1. Boom. All right. So all right. I save up to employer match in 401k. Should I save $6,000 in Roth IRA first and then go back to the 401k? So I answered this earlier. You want to match what your employer matches and then max out your Roth IRA. Okay, so take advantage of that free money. Take advantage of the match, and then max out your Roth IRA. All right, cool. So I think I answered all the questions. How do I set up my IRA contributions? So when you go to open up the account, it's going to ask you to start depositing. When you deposit into the account, then you want to go to, it's probably going to be like a transfer or move money section in your IRA. You just want to go to that section and then schedule your contributions. So you can set a schedule to when you add money to the account. That's pretty much all you want to do. If you want to, if you need help setting any of these up, I do offer one-on-ones, y'all, where you can do that, as well as give you like a personal game plan. It's recorded and all that type of stuff too. Just reach out to me on Instagram, DM me. And if I have any slots available for the rest of this month, I'm going to send you my calendar. But I'll also send it to you anyway for the next month. Just know that I only accept like 5 per month right now. All right. So that's how you set up the contributions. Best crypto to invest in today's market, Bitcoin and Ethereum. Bitcoin and Ethereum. Those are the best in my opinion. Okay, but go and do your own research. Don't just listen to me. Go check it out. Go research. Go look at it. Make sure it's something that fits your investment tolerance. All right. Life insurance is always good. I always recommend life insurance. Okay, that's part of your financial foundation. If you don't have life insurance, then that's a key part of your financial foundation that's missing, and that's going to leave a big hole in your strategy. You don't want to leave a hole in your foundation. Okay, life insurance is going to replace your income, and it's going to be there to protect your assets at the same time. So life insurance is important. Get life insurance. Get life insurance, most definitely. All right, so look. Double tap. Let's get it to 12,000. Since we had 11.4, let's get it to 12,000, y'all. Double tap if you learned something tonight. Double tap if you want me to save this live and put it on my YouTube. Double tap, double tap, double tap. Let's get it to 12,000 likes before I get off, y'all. I appreciate y'all so much for sticking with me for this hour and 15 minutes now. Been on here for a minute. Hour and 15 minutes. Solana is good too. There's a lot of good ones. Solana, Matic. So yeah, I'm going to save it, y'all. I'm going to save it. I just wanted y'all to double tap. So that we can get to 12,000 likes. Appreciate y'all so much. Appreciate y'all. If you don't follow me already, make sure you follow me. Follow me on here. Follow me on Instagram. Subscribe to my YouTube. I'm trying to do more videos on YouTube, but right now I'm really focused on TikTok. But follow me on YouTube. I do put my, TikToks that I do put my TikToks on YouTube. So follow me on YouTube. That's probably the best way to stay connected with me and my TikToks, because I know my TikToks don't always go to y'all. They're mostly put out onto the For You page. That's just how TikTok is running right now. So subscribe to my YouTube. Follow me on Instagram. Follow me on here if you don't already. And join our group. Join our community. We have over 1,700 people. We do weekly chats inside the group. I try to drop some knowledge in there pretty much every day. So make sure y'all tap in with us. Stay connected. That's also the best place to ask me any questions so that you don't have to wait until the live when I go live. That's the best place to ask me questions throughout the week. I'm in there always answering questions, helping people any way that I can. So I appreciate y'all so much. So much. Start with a job. I could do anything. Cool. Hey, follow me. Stay in touch with me. I appreciate y'all so much. Make sure you tap in with our group. But till the next time, y'all, remember I do this every Friday. Signing out of Financially Lit Fridays. Y'all be good. Y'all be blessed. And remember, believe in yourself, invest in yourself, and most importantly, love yourself. Y'all have a good weekend. Be good. Peace. Well, I'm trying to get off, but I don't know how to end the live no more. They don't have the regular end the live on here. How do I end the live? That's a problem. Thank y'all so much. Appreciate you. Where's the end? How do you end the live? Okay, I see the performance. I see all that. Total views, total gifters. Yeah, that's cool. Did they forget to put the end the live button on here? This is funny. This is crazy. They really didn't. There's no end button on here like it used to be. Yo, what is up? They're gonna have to fix that. All right, y'all. Dang, but I don't wanna close the app and lose the live. Like that's what I'm afraid of if I do it that way. Cause there's really no end button. Go ahead and screenshot, my bad. I don't want to end the live. I don't want to close the app and then lose it. I can't believe I ain't noticed that before. Bro, they really don't have an end the live button. This is wild. This is viewing. Is it viewing like I'm viewing myself? This is crazy to me. All right, y'all. I'm gonna have to. I hope it saves. Let's hope. Let's hope. Let's hope it saves. All right, y'all. Y'all be good.